All right, fantastic. Good morning and welcome. Today is Monday, November 6th, and welcome to Coffee with Marcus and Mark. Good morning, Mark.
Good morning, Marcus. Good morning, everyone.
All right, so this will be an exciting morning, and in a moment you'll see why. But let's see, who here wants to make money with trading? Come on, type in a yes. Oh, yeah. And who here wants to make enough money with trading so that you can quit your job? Oh, yeah, type in a yes. Exactly. Who here wants to make so much money with trading that you can travel the world and live the lifestyle that you always dreamed about? Oh, yeah, absolutely. Now let's see how many of you want to get as much as possible out of our time together here today. Yes, 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 yes. I want that for you too, because for most of you with us here today, this is going to be a long-term relationship between us. I promise you, because once we show you how simple this is, and once we show you an easy way to trade, once you realize that this actually works, and once you realize that you can do this too, you will want to hang out with us for a lifetime. I promise you that. So today we want to look at a few trades with PowerX Analyzer, but first of all, let's see what's going on here this week. So I want to bring up our calendar, our Forex factory calendar. And Mark, it seems that we have a really light calendar this week.
We do, Marcus. Not a whole lot going on this week, and we'll have to see. Earnings season is also winding down as well, and we'll see if we could get some movement.
Yeah, so we have a few FOMC members speaking, Dudley speaking today, Quarles speaking tomorrow, then also Yellen. On Wednesday, we only have the crude oil inventories, Thursday, unemployment claims, and Friday, the preliminary University of Michigan consumer sentiment. And that's all there is on the calendar. And so this morning, it's also a rather quiet start in the week. I mean, we did some movement overnight. So when we look at the indices here, the mini S&P whipping up and down here, and right now, right at around the unchanged mark of Friday. Same with the Nasdaq here, a quick drop, a quick rebounds, and then right now exactly at 0% unchanged mark from Friday. Same with the Dow here right now. So all indices showing the same behavior. The Dow is slightly up here, but basically nothing. So we'll see. We were starting at around the unchanged mark from Friday. Now, crude oil, on the other hand, is still on fire. I mean, this morning we broke through the 56 level, and we'll see what happens here with crude oil. Gold and bonds, both slightly up here. So, flight into safety, Mark. What do you think?
Yeah, it could be. Gold, has been down a little bit over the last couple of sessions, but it looks like we're up here at the beginning of the week when there isn't a lot of movement in the other markets. So that's interesting.
Yeah. All right. Well, this morning we want to take a look at a few PowerX trades that came up here for us, and just talk about it. So we had three symbols coming up, and again, it depends on your settings. So based on your settings, you might have different symbols. Based on your settings, you might have none, or also have different numbers. This is where you know. Oops, we wanted to move in here. That's where you know it is important what kind of account settings you have. But let me just get rid of these vertical and horizontal crosshair lines, not the guides. These two, Bobby. So the three symbols that came up here for us. All right, ta-da, ta-da, ta-da. These are winning trades in crude oil, so that's going on in the background. Well, let me see. So let me maximize this. There we go. So EMES was one of the symbols that are coming up, and we are looking for trendability and non-gappiness. Now, when you look at this stock, what do you guys think? Is this a stock that is nicely trending, and is this a stock that is not gappy? So take a look at this. And yes, you are right. We do see some nice trends here to the upside, to the downside, a little bit of a little bit of everything here. So there's no gaps. I mean, none that I can see. And do you see any gaps, Mark?
No, nothing major anyway.
Nothing major. So it fits our true criteria of trendability and non-gappiness. Now let's take a look at the numbers here. So we have a total of 17 trades. 7 of them are winning trades and 10 are losing trades. Now this gives us a winning percentage of 41%. Now, for some of you, you might say, yeah, I don't like trades that are only at 41%. For us, that's absolutely fine, right, Mark? I mean, you would take the,
Yeah, I agree.
yeah.
Yeah, and especially when you have a better risk reward there. So 41%, that works for me. We just have to understand that it has a slightly lower winning percentage, but when it's a winner, it should pay off.
Yeah, you see right now the risk and reward here. We are trying to risk $1.76, trying to make $4.86. So the risk reward ratio is 1 to 2.76. So getting close to 1.3. And if you also look at the past trades, we see that the average winning trade is 2,234, where the average loss is $470. So a very nice ratio here. So that's definitely a trade that I like. Looking at the overall ROI, based on the account settings that I have here, we are looking at an ROI of more than 100% a year. So that's definitely a very nice trade. So another one that popped up here is HIIQ. So HIIQ here, let me ask you guys, what do you think in terms of trendability and non-gappiness? Do you see nice trends here? Seems that mainly to the upside, but yes, we do have a few short trades, we have a few long trades, and it seems that they're really nice trends. Now we do have a long bar, but this occurred after we got a short signal, so that definitely helped us. So here also recently the bounce back, and right now we are trading at around 22, and this is where we're getting another buy to open signal. And I see the comments here. And this is where Ron said HIIQ looks okay for trendability. I would absolutely agree. I mean, nice trends, no gaps. So based on our visual inspection, definitely a stock that would pass. Right, Mark? What do you think?
Yeah, I agree. We have some nice movement. You see that when there are trends in the market, there tends to be a continuation, not a lot of choppiness where it's just alternating, and it looks pretty good to me.
Yeah, and let's take a look here at the risk reward ratio. So we want to risk $4.09, trying to make $15.10. So a very ambitious profit target, a ratio of 1 to 3.69. And if you look at the past wins and losses, a profit factor of 3.34. In the past, the average losing trade, $562. The average winning trade, $2,600. So overall, I do like the ratio. Now, this is another stock with a rather low winning percentage. Again, same deal, 17 trades, 7 wins, 10 losses, so a 41% winning percentage. But again, if this trade works out, it can give us a very nice risk reward ratio. So that's definitely another one that I would consider. Now, looking at the third one, MYOK. So MYOK, ooh, this year is a different story. As you can see, for most of the time of this year that we are looking back, this trade has been just chopping sideways here between, now you can see the price is 12 and 14, sometimes climbing up as high as 16. Then we had this huge gap to the upside. Oh, okay, we'll get back here in a second. There it is. So the huge gap to the upside, a few black bars, now a downtrend. I mean, compared to the other two, this is definitely an uglier chart because here, in terms of trendability and non-gappiness, we do see this huge gap. Admitted, it was in our favor, but I mean, if I had a choice between these stocks and I could either trade EMES, which is nicely trending without any gaps, HIIQ, and MYOK. So this is where I would kick out MYOK and focus on EMES and HIIQ. So these are the two that I'll consider trading for today. Now, if you consider trading options, both of them have options here available. And here for EMES, we have an option with a strike price of 7.5, 39 days to expiration, with an entry price of 94 cents. And you see the risk reward here, 85 cents that we risk, $4.23 that we are trying to make on this one. So the risk reward ratio here also really nice. Let's see, the last bid and ask that we got here was 0.7 and 0.8. It's also a very nice small bid ask spread here. So that's definitely something to consider here. Well, looking at HIIQ, we'll see what's going on here. If you look at the options tab, so here we also have three possible options: the conservative, the medium aggressive, and the aggressive one. Now, the conservative one, deep in the money here, because we're looking at a buy to open at 22.61. So a strike price of 20 would cost us $4.05. The risk reward ratio, we would risk $2.86 trying to make $13.68. So that's also a very nice risk reward ratio. If you are looking for a cheaper option, you might consider the at the money option. This is only $2.73 here. And as you can see, we're also expecting to make $12.50, risking $2.15. Looking at the bid-ask spread, you see that the bid-ask spread is bolded, meaning that it is rather large. So this is something where if you consider trading the option, you definitely want to keep an eye on it and see how the bid-ask spread is this morning. This is the last one that we received from Friday. It can be a completely different story here this morning as we are going into trading, and we might see a much tighter bid and ask spread here. But that's what we do for you. We bold it when we see that there is a larger bid-ask spread, so something to be aware of. Mark, what are your thoughts on these two?
Yeah, I mean, this is where looking at the entry, the option at stop on this one is you have to understand that you're kind of all in on this one, which isn't a bad thing when you look at the reward. But like, let's take a look at the one that Marcus just highlighted, the 22.50. If your entry price is 273, you see that the option at stop is 57 cents. This is telling us that you're really giving up a lot on this trade if the theoretical value of the option is 57 cents when we're stopped out on the stock. But then the reward is great, because the reward, we're looking to make $12.52, the option being worth $15.25 at its target. So the reward is very nice compared to what's risked. However, when you're buying this option, this is one that you need to make sure that it's a position that you feel comfortable putting on and pretty much risking the whole amount, right? I mean, I would hope to get out at 57 cents if I bought it at 273, but if you're not comfortable risking $273 on this trade, then it's probably better to trade the stock instead.
Yeah. Now, Brian is asking an excellent question. Do you buy the options with the limit or with the stop order? Options, I would always buy with the limit order, and I'm trying to get in at the so-called midpoint. The midpoint is right in between the bid-ask, and usually when I have time to watch the markets, I like to be skewed a little bit more towards the ask side if I want to buy, towards the bid side if I want to buy. So if you look at this here right now, the bid and the ask is 320 to 420. I mean, that's the last one that we received. The midpoint would be $3.70. I would give it a shot and try to see if I can get in at $3.50. Okay, so with the limit order, and then I'll wait a few minutes, and when I see that I'm not getting filled, I gradually raise my bid here to maybe $3.60, $3.70 until I'm getting filled. Now, very important, before you place the option trade, the criteria for the stock has to be given. So we have to trade through 2261. Do not place the option trade unless the stock has traded through the specified price here. So that is extremely important. Always, always, always watch the stock for HIIQ. make sure that it trades above 22.61. If so, then you can place the options trade. The same here for EMES. If it trades above $7.80, then you can place the options trade. So do not place it before. Always wait until we are going through the trigger price here. All right, so let's see if there's any other questions that are coming in here. Otherwise, these are the things how we would start off the week here using these two trades, considering buying stocks or options. I mean, depending on what you are doing here right now. And I see that Scott is asking a question. Okay, what type of strategy would you suggest for options when the stock gaps down or up? Since the numbers you have on the option sub got sort of out of the window. Scott, you're absolutely right. I mean, if this stock here, if we want to enter into the options when this stock moves above 780, and let's say this morning it would open at $16, you're absolutely right. This would mean that everything is going out of the window. And you know what, Scott? For me personally, this would mean pass. I mean, we have another stock that hopefully then opens right here where we want it to be, maybe at around the 22 mark, so that it is very nicely and orderly trading. And sometimes it happens that the stock opens with a huge gap, and if this is the case and all the numbers are out of whack, I personally would pass because we are getting new opportunities pretty much every day. So these are my thoughts on this. Mark, do you have any additional thoughts?
Nope.
All right. Well, okay, fantastic, guys. This concludes then to this morning's Coffee with Marcus and Mark, and we will be back tomorrow morning. We'll probably take another look at these two stocks and see where we stand, what's happening, or we'll see what other questions we have on our list that we want to cover. So let's see what this week of trading brings us. We wish you all the best in your trading. We hope that you're making a lot of money. You have a terrific day, and we'll talk to you again tomorrow.